You're looking at two economic powerhouses. You're looking at a high-stakes meeting. US President Donald Trump and Chinese leader Xi Jinping all set to meet today in the high-stakes summit in South Korea. Officials on both sides said earlier this week that they had reached a consensus to address their respective concerns. And you do have Laura Westbrook, in fact, who's reporting from South Korea. Take us through the updates when it comes to this particular high-stakes meeting there.
This is US President Donald Trump's first meeting with Chinese President Xi Jinping since he began his second term in office, and their first meeting in person since 2019. Now, negotiators from both sides say a framework has been agreed leading up to the meeting, and Donald Trump has projected optimism ahead of the meeting, saying he thinks it would yield a great outcome for the world. And Trump has also indicated that the agreement could include lowering 20% tariffs on Chinese goods that are related to the drug fentanyl. High on the agenda will be rare earths. China went into these talks by leveraging its chokehold on the supply of the critical minerals, announcing it was expanding its restrictions on the exports of rare earths. Beijing said that was a response to the US putting Chinese groups on a trade blacklist. And Donald Trump had threatened to slap an additional 100% tariffs on Chinese imports from November 1st in retaliation. But US Secretary of the Treasury, Scott Bessent, has said that that was effectively off the table after this weekend's talks. Now, China dominates the global supply of rare earths, which are used in everything from smartphones to EVs to fighter jets and drones. The US wants more access to rare earths from China. Donald Trump will also want to finalize a deal on TikTok, transferring it to US ownership. He will also be hoping for the Chinese to buy soybeans again, easing the pain on American farmers, a key support base of Trump's. Now, China will be looking for access to advanced computer chips, those fentanyl tariffs removed, and adjustment to port fees. Analysts say the meeting is a chance to reset the relationship and possibly secure a visit by Donald Trump.
All right, then, and it is a high-stakes meeting. Like you've just pointed out, this is the first meeting between them since 2019 as well. And the meeting, of course, comes amid hopes that the leaders are going to be hammering out a trade deal that is going to be bringing a truce in the blistering trade war between the world's two largest economies. You're looking at two mega economies, and you do have the conflict that has, in fact, roiled global markets, sent international supply chains into panic, and you see a little bit of that receding at this point in time because you do have a little bit of optimism around this meeting. There you can see a very powerful handshake on your screens as well when it comes to the two leaders of your top two economic superhouses as well. And what's high on the meeting's agenda possibly is going to be rare earths. Other than that, of course, you do have tensions. In terms of trade tensions, that's something that you're looking at. China's chokehold on the supply of the critical minerals when you're talking about rare earths. That is going to be something that is important. Other than that, of course, there's TikTok that we're looking at. That is something that could possibly be also discussed. Let's also take the conversation forward, try and understand what is being penciled in when it comes to this particular high-stakes meeting. And it is a day like no other. A good day, in fact, to go across to our guest. Peter McGuire, in fact, CEO of AustraliaTrading.com, is standing by. Peter, a very good morning to you. It is a very busy morning for us here because you do have a couple of very important developments. What's happened overnight, at least for us, in terms of the Fed meet, and also what is happening just right now. You do have two leaders of the two economic superhouses that are just discussing trade, tariff tensions, and a lot more, in terms of what's being discussed. You're talking about a high-stakes meeting, right, Peter?
Absolutely, Shreyanshi, and good morning. Greetings from Sydney. A couple of things, and as you highlighted into the lead-up, certainly rare earths are one of the most important criteria that President Trump has to get right to secure his country's growth. From, you're talking about missiles, you're talking about defense systems, aircraft, and military, all of the fabric of that. We also understand that President Trump has forged strategic relationships with many Asian countries over the last couple of weeks to shore up and to make sure that he's not only going to be reliant on China for rare earths in the future, and this is probably a stopgap situation or positioning to make sure that he's got continued supply over the next year or so until America can re-harness and re-engage from the manufacturing of those rare earths.
Absolutely, Peter. And I think the real question here is whether or not it's going to be a good morning for the markets as well, right? Because in terms of what this meeting is against the backdrop of, you do have a little bit of a mixed messaging there, right? US is optimistic. You do have commentary from China that is a little bit combative because they've said that they're against unilateralism. They've also issued a very strong message when it comes to tensions in the South China Sea. So what is your sense about this duality at this point in time? More importantly, about what this really means for the markets? Because there's a lot of moving pieces to this puzzle at this point in time.
Absolutely, that's so true. I mean, you've got the geopolitical ring fence of what that means in the South China Sea, as you highlighted. Also, you're looking at a US market that is absolutely raging on fire as far as the heat of it. The NASDAQ. Have a look what's happening as far as some of these, the Mag 5 and the reporting season and what's going on from I think a growth perspective, S&P and the Dow. So the fabric or the landscape of US equities is a really, really hot market at the moment. Also, you're going to fuel that with rate cuts. And the other side, the Chinese market is relatively strong as well. It's bounced very, very strongly over the last 6 months or so, if you're looking at the CSI 300. So the overall momentum is one of uplift. And now we're looking at the negotiations from a tariff perspective and how that's going to impact the likes of soybean farmers in the States and also the consumer in the China and how that all piecemeals together.
Absolutely, Peter. And one thing that you've highlighted, I just wanted to take a leaf of what you said, data drought, because of the government shutdown is what you also have, that you're looking at, a lot of uncertainty. And that is also something that you do have the FOMC also highlighting, and we'll come to that in just a bit. But do you think right now, as things stand, there's a case for caution for global equities at this point?
There are always, when you've got a really super hot market, if we put our mind across to what happened with gold in the last 6 or 8 trading sessions, it's down the best part of 10%. Markets wash out quickly. I'm not saying that's going to happen with equities, but it's a really, front of mind, and I've just thought of that right now. That's how markets react, and they react very violently when you're at a very inflection point. And sometimes you see inflection points appear because of geopolitical, or markets just get ahead of themselves. So that's where we are at the moment, and I'm not calling that, but I'm very conscious that we're at all-time highs, and that is, in its own mechanism, one that you need to be very wary of. And there's always risk when you're looking at risk on or risk off. And that's the market sentiment that wraps itself around equity markets.
Absolutely. And, you wouldn't be able to sniff some of that risk when it comes to NASDAQ right now, because you do have NVIDIA hitting that $5 trillion in valuation as well. But, let's move on. Let's take a look at the FOMC as well in terms of a couple of things that are happening here. I quickly wanted to get a sense of what you think about that as well. The decision, of course, is on expected lines, but you do have a dissenting Fed that has all of this happening. So based on the commentary, what do you think also forced the Fed chair's hand this time around? And what do you think, more importantly, this also means when it comes to the December meeting as well?
Of things. First off, yes, the street was anticipating, it was 99% expectation or higher that there would have been a rate cut. And I think the pressure coming naturally from from an inflation standpoint. We're also talking about cheaper energy markets. We're talking about a very, very persuasive Commerce Secretary, Treasury Secretary, and of course the President putting pressure on the Fed as far as a rate cut. And then the third point of it is, yes, dissension, but is there going to be another rate cut in December? Is that what we're terming? And is that what the momentum is going to dictate? You've got a government shutdown probably in about day 28 or 29 at the moment. And also that mechanism. Are we going to be this time next month looking at 60 days of government shutdown? There just seems to be a real disconnect. And I'm not sure whether Wall Street...
Absolutely, and there is a real disconnect. I think the very important bit that we have right now is what you're seeing on your screens as well. And, thank you so much, Peter, for joining us bright and early this morning, because, you do have this very important high-stakes meeting. You're looking at the deal that could possibly be hammered out. There's a lot of important commentary coming in from US President Donald Trump, who's talked about how this just could be worked out in terms of the deal there, and you do have a bunch of these very important things that you're looking at bright and early this morning.